Are you ready for the biggest thing that happened to the cryptocurrency market since Bitcoin was created? I'm talking about the approval of BTC Spot ETFs and Ethereum Spot ETFs. In this video, we'll discuss Bitcoin and Ethereum Spot ETFs and the potential impact of these ETFs on the cryptocurrency market. Let's explore the enchanting world of crypto through the lens of SEC approvals for the BTC Spot ETF and the Ethereum Spot ETF. It's a bit like discovering hidden treasures in the financial landscape. The SEC has yet to allow a spot Bitcoin ETF to hit the market after 10 years of efforts. However, the SEC is now ready to consider Ether Futures ETFs. Volatility Shares plans to list its Ether Futures ETF on October 12, though the SEC may still reject the proposal. It could be as early as 2024 before the SEC issues a ruling on the proposed spot Bitcoin ETF, BTC Spot ETF, and ETH Spot ETF. These two acronyms might sound like a mouthful, but they represent exciting ways to dive into the world of cryptocurrencies without directly owning them. First, let's break down what each of these terms means. BTC Spot ETF. It represents a Bitcoin spot ETF. BTC stands for Bitcoin, the leading and most well-known cryptocurrency that continues to make headlines worldwide. Spot in this context refers to the purchase and ownership of actual Bitcoins, as opposed to futures contracts or derivatives. Thus, a Bitcoin spot ETF essentially provides investors with a way to gain exposure to the actual cryptocurrency rather than speculating on its future price movements. It's like having the basket that holds a collection of assets, in this case, Bitcoin, and you can buy and sell shares in that basket on a regulated exchange, just like you do with stocks. This means you can invest in Bitcoin without having to navigate the complexities of setting up a cryptocurrency wallet or working with private keys. If the video is enjoyable for you, please like and share it. Subscribe to get more videos like this. Moving back to the topic now. The Bitcoin Spot ETF concept has the potential to bring more institutional and retail investors into the world of cryptocurrencies. However, it is important to note that the approval and launch of a Bitcoin Spot ETF involve regulatory scrutiny and compliance. The relevant authorities have to ensure that ETFs meet certain standards and safeguards to protect investors. Thus, a Bitcoin Spot ETF is an impressive financial innovation that can bridge the gap between traditional money and the dynamic world of cryptocurrency. As with any investment, it's essential to be aware of and consider your financial goals and risk tolerance when exploring this exciting avenue. Ethereum Spot ETF. Why not explore the concept of an Ethereum Spot ETF? It is seen as the younger brother of Bitcoin and is now accessible to investors through it. It's like having the ability to invest in the future of blockchain technology with the simplicity of traditional financial instruments. What exactly is an Ethereum Spot ETF? The blockchain platform Ethereum, or ETH, is well known for its support for smart contracts and the creation of decentralized apps, dApps. When you invest in an Ethereum Spot ETF, you are essentially buying and owning real Ethereum coins, making it a direct and tangible way to participate in the Ethereum ecosystem. What makes an ETF so attractive is its user-friendly nature. It acts like a basket containing Ethereum tokens, and you can easily buy or sell shares of this basket on traditional stock exchanges. This eliminates the need to navigate the complexities of cryptocurrency exchanges, manage private keys, or worry about wallet security. It's investment simplicity at its best. Ethereum is the driving force behind numerous decentralized applications, the growing NFT, non-fungible token market, and the development of blockchain technology for various industries. With an Ethereum Spot ETF, you can get a stake in this transformative technology without the complications often associated with crypto investing. This development is particularly exciting because it has the potential to attract a wide range of investors into the Ethereum ecosystem, including institutions and retail traders. For example, institutions may feel more comfortable allocating funds to an ETF structure because it adheres to regulatory standards. It also provides a level of oversight and investor protection. However, it is important to note that launching an Ethereum Spot ETF involves regulatory scrutiny and compliance just like any other financial product. Regulatory bodies aim to protect investors' interests and ensure that ETFs meet certain criteria before they are made available to the public. The potential impact of the BTC Spot ETF and Ethereum Spot ETF if the SEC approves them. Imagine the SEC, U.S. Securities and Exchange Commission, as the gatekeeper of the financial kingdom. Their approval for BTC and ETH spot ETFs is akin to them unlocking the gates to a new era of crypto investment. It's a monumental event that has ripples throughout the financial realm. 1. Legitimacy and Trust. The SEC gives its nod of approval to these ETFs. What does it mean? It's a seal of legitimacy. Investors, both seasoned and new, suddenly see these crypto ETFs as more trustworthy. They're not just speculative, Wild West investments anymore. They've entered the hallowed halls of regulated financial products. 2. Accessibility for all. Now talking about accessibility, the SEC's green light means that these ETFs are available to a wider audience. It's like opening up a treasure chest and inviting everyone in. You don't need to be a crypto expert or a tech wizard to invest in Bitcoin or Ethereum. Your average investor can simply buy shares in these ETFs, just like they would with traditional stocks. It's financial inclusion at its finest. 3. Market impact. The impact on the crypto market is like a ripple turning into a wave. When these ETFs get the SEC's blessing, it's a signal to institutional investors that crypto is becoming a more mainstream and accepted asset class. They start pouring in, increasing demand for Bitcoin and Ethereum. Prices can surge, creating opportunities and challenges for traders and investors alike. 4. Risk management. Now, here's the fascinating part. While these ETFs make it easier for folks to invest in crypto, they also provide a level of risk management. You're not dealing with the wild volatility of individual cryptocurrencies. Instead, you're investing in a fund that tracks the overall performance. It's like having a skilled captain navigate your ship through turbulent waters. 5. Regulatory framework. The SEC's approval comes with regulatory oversight. It's like having the guardian angel watching over your investments. This oversight can bring a sense of security to investors. They know that there are rules and regulations in place to protect their interests. 6. Education and awareness. Lastly, the SEC's decision brings crypto into the limelight. It sparks conversations, educates people about cryptocurrencies, and piques their interest. It's like a beacon shining on the possibilities and potential of this digital financial frontier. But there are challenges along the way. Price volatility, market speculation, and the need for responsible investing still exist. It's essential for investors to tread carefully, do their research, and understand the risks. Now, why are these ETFs so fascinating? Diversification. ETFs offer a diversified approach to crypto investing. Instead of putting all your eggs in one crypto basket, you can spread your risk by investing in an ETF that tracks the performance of an entire cryptocurrency like Bitcoin or Ethereum. Liquidity and accessibility. ETFs trade on traditional stock exchanges, making them easily accessible to mainstream investors. You can buy and sell ETF shares just like you would with stocks, making it a convenient way to invest in cryptocurrencies. Regulation and security. ETFs are regulated financial instruments, which can provide a sense of security for investors. They adhere to certain standards and are subject to oversight, which can help mitigate some of the risks associated with cryptocurrencies. No custody hassles. You won't need to worry about securing your digital assets. ETFs offer a solution to custody issues, ensuring that your assets are safe and prosperous. ETH providers act as vigilant custodians, ensuring that private keys are safely managed and enriched. This allows you to focus on your investment goals. It also eliminates the need for individuals to be the gatekeepers of their digital assets, allowing them to thrive without worry. However, it's essential to note that while BTC and ETH spot ETFs offer a more accessible entry point into the world of cryptocurrencies, they also come with their own set of risks. Prices can still be volatile, and the performance of these ETFs is tied directly to the underlying cryptocurrency's price movements. In conclusion, the SEC's approval of BTC and ETH spot ETFs is a significant milestone in the world of crypto. It's a bridge between the traditional financial realm and the exciting, sometimes tumultuous, world of cryptocurrencies. It offers accessibility, trust, and regulatory oversight, but it's not without its share of adventure. It's as if the financial world just got a little bit more enchanting, inviting us to explore the future of investing. Isn't that so? Share your thoughts about this with us by commenting below.